Welcome back. Mihir Vora joining us now, and lots to talk to about the market trend currently, perhaps where to cherry pick. Mihir, good to have you with us. Last time we spoke, you're still a little cautious and valuations continue to look stretched, of course. But now that we've started to see that little bit of a pickup in economic activity and are hearing at least positive commentary coming in from key management, what's your outlook going forward?
Hi, good morning. Always a pleasure to be here. Yes, on one hand, we have the markets which have done so well in the last 3 months, which has kind of stretched valuations a bit, as you mentioned. And on the other hand, we do have the month of June, which showed us that the worst probably was over in April and May, and June did show a good bounce back from the really negative numbers that we saw in April and May. The first week of July also showed the continuation of the momentum that we saw in June. But now in the second and third week of July, probably things are tapering off a bit. So if we were talking about, say, just a number, -50 or -60 in economic activity in May and April and May, probably June was at -70, -20 or -30, and July is also kind of maybe stabilizing at that level. So given the fact that we have this, sporadic lockdowns and the recovery seems to be a bit stretched out, the sharpness of the market move makes me a little bit cautious. Though we are on a recovery path, but it probably be a bit of an elongated recovery and not a sharp V as we have seen in, say, the US markets, where the fiscal stimulus has been so large that even the economy is recovery on a V. So probably we are looking for a little more elongated recovery in India. We have been having lockdowns in cities like Pune, in Bangalore, Chennai. These are large cities and they contribute to a good amount of GDP. So given the sharpness of the move and the elongated recovery, makes me a little bit cautious.
Okay, so still a little cautious. So Mihir, would you then continue to stick with certain themes that have already been progressing well, seeing clear signs of growth potential, for example, pharma or chemicals, or would you venture into other pockets of the market?
So clearly, one thing that has emerged, and which is what we've been playing since the last 3-4 months, is that the rural economy is more resilient. It looks like the trickle down of the government stimulus, coupled with a good monsoon last year and very good distribution of rainfall this year, and the Manrega, etc., that has been percolating down, has made the rural economy a lot more resilient. We are also seeing some pricing power in food grains and vegetables and etc. So I think the rural theme, basically, whether it's two-wheelers or four-wheelers, tractors, paints, cement, low-ticket items like FMCG, those relative segments should do better in the market. That's one thing that we are looking at. Second theme that we will be playing is that, as I mentioned earlier, the developed market recovery probably may be a bit sharper, like the US and the Europe, because of the stimulus that they have taken. Which means that exporters, especially the services providers like IT, we have been bullish on for quite some time, and even the commentary from the companies, corroborates that thesis that the demand for IT services and a lot of other exporting items, whether it's auto anchor, etc., may recover more sharply than the domestic economy. So that's another theme that we are playing. The third theme, which is emerging and probably will get accelerated with the issues around the border, is more focused attention to make in India, reducing the trade deficit, and more defense production locally. So those are some of the themes that we are playing, which should do relatively better than the overall core domestic economy.
Mihir, good morning. Wanted to get in a view as to how you're looking at, this Make in India theme that you spoke of, prospects for specialty chemicals, even the likes of defense. Take us through a little bit more about your outlook within these two spaces, or even the rural-based theme that you were optimistic about.
Sure. So, we have been talking about localizing defense and import substitution for a lot of items, given the fact that we have been running a very big trade deficit. The problem with a trade deficit is twofold. One, of course, it weakens the currency and it keeps the local interest rates high. But second is it takes away jobs. When you're importing electronics, when you're importing value-added items, you're actually exporting jobs. So this import substitution, Make in India theme solves for both. We have a more stable macroeconomic situation in the long term. And secondly, the large unemployed population will get a job once we make more and more in India. Now, the traditional places where India has been good, and these are large employers, are like textiles, gems, and jewelry. But the largest chunk of import over the last few years has started becoming electronics, whether we are talking about consumer durables or mobile phones. These are value-added items where the assembly piece is a significant portion. Consumer durables like AC, refrigerator. So these are assembly items. Maybe we don't make the components, but the assembly part certainly can be done in India to start with. And once we have an ecosystem, even the backward integration like compressors, PCBs, the chips and etc. can come to India. So I think the government has already come out with a package for electronics. It's a turnover-based incentive. The more you produce, the more incentive that you get. I'm expecting something similar for pharmaceuticals and chemicals. And I think in the next 1 year, we should see a lot of initiatives by the government to basically make sure that our import dependence reduces. We also might see reworking of FTAs, and we also might see the package that was, or rather the tax cuts that were implemented in September 2019. The corporate tax cut to basically incentivize more investments over the next 3 years. Chemicals, electronics, pharmaceuticals, even textiles, gems and jewelry, those kind of segments should really start to benefit. On the defense front, while our public sector companies always had the capacity, probably it was not a focus, but in the last 2 months, I do see a serious attempt to ramp up our defense capabilities. And I think this is likely to become a more permanent situation where our borders will be more militarized, more supplies and more stockpiles will be kept in the borders. So I think for the next few years, we will see more activity for our defense companies, which are mostly in the PHU space. So that's one thing that I'm quite bullish on. That this situation around the border will lead to a lot more permanent increase in activity for the defense production and more localization,
Sure.
whether it's for missiles,
Right.
equipment, etc. Yeah.
Right. Have to leave it there, Mihir. Appreciate your time. Thanks much for joining in and sharing with us your outlook.